What's up, everyone? It's Karthik with MoneyVest. So we just had the PPI numbers come out earlier today. We did see a little bit of a pullback in the market. So if you come take a look at QQQs right now, we did see a initial drop in the Nasdaq here, still up 17 basis points right now, but the initial reaction was a little bit lower, very similar to what we witnessed yesterday for those CPI numbers. And volatility here on the 5-minute chart, you'll notice also did increase, right? So it went from about 17.5 back up to as much as 17.8. So not a huge increase, but we are starting to see that rollover once again, similar to what we witnessed yesterday for those CPI numbers. So good morning, everyone. Thank you so much for joining. Share this live stream with other members, traders, investors, your friends, family, everybody who wants to join in for this market open live stream. We got about 44 minutes until market opens, and we're going to take a look at those numbers together. So this was the report that came out earlier today. So 0.2% month over month for PPI. Versus the consensus of 0.2%, so in line with expectations, and year over year coming in at 1.7%, which was also a little bit better than what the expectations were at 1.8%. So something very similar to what we witnessed yesterday for headline inflation CPI coming in better than what the expectations were at 2.5 versus 2.6%. So it's practically the same report. Year-over-year PPI coming in better than expectations by 10 basis points, month-over-month in line with expectations. And core inflation, once again, core PPI, when you exclude for food, energy, month-over-month increasing slightly higher than what the expectations were. So 0.3% versus 0.2%, and year-over-year core PPI sitting at 2.4%. Now, reading a little bit further into this report, what you'll also see is that if you take out food, energy, and trade services, we were actually up 3.3%. And I think that is what the markets might be putting in a little bit more weight into, because that is an acceleration back higher from the last couple months. I mean, we did see June and July coming in at 3.2%. So we were kind of flatlining a little bit on the PPI, 3.2% for the last couple months. But August, we actually saw a bit of an acceleration back up to 3.3% for core PPI when you exclude for both food, energy, as well as trade services. So it really depends how much you want to read into it, but this is the highest level going back as far as May 2024. And if you were to cross above 3.4, then we haven't seen that level in all year. In over 12 months, we haven't seen that PPI reading of over 3.4 or 3.5%. But luckily, we were still at 3.3, but that is still an acceleration back higher a little bit from compared to the last couple of months. So that's where we are for inflation. It's starting to paint a really interesting picture for the U.S. economy, more in the lines of stagflation, because yes, inflation is coming down. So we are seeing some, healthy decreases in overall inflation. But at the same time, you'll notice that it is also stabilizing a little bit. So this is the inflation picture. While total PPI on a headline basis, year-over-year basis, coming down from 2.7, then 2.1, down to 1.7%. That is good. It's still higher than where we were back in June of 2023. So just over a year ago, we were actually at a lower reading, and this has accelerated back up. And if you come take a look at less food, energy, and trade services, it was lower at 2.5, 2.7%, then started to move up 3.4, and then 3.2, 3.2, and then starting to see that acceleration, as I pointed out, back up to over 3.3%. Like I said, if you were higher than 3.4, then that would be a level that we haven't seen since March of 2023. So this is more of a stabilizing picture than anything else. I mean, if we want inflation to be trending lower, we want to see something like this, where we saw consistent decline on a year-over-year basis, but now it's really just stabilizing sideways. And the problem is that it's actually stabilizing at a higher level than what the Fed wants it to be. If you really look at CPI as well, so let's just open it up into a different tab here. So CPI, we're going to come over to the charts, and we're going to look at the last 12 months worth of CPI year-over-year readings and on a 20-year basis. So this is good, right? So this is headline inflation stabilizing, and then hit its peak back in March of 2024. Then from 3.5, it's been accelerating lower, 3.4, 3.3, 3%, and now down to 2.5. That's good. But if you take a look at food and energy excluded, so basically just core inflation, it's been more or less stable. Yes, it's still trending lower, but at a very, very slow rate. So that just goes to show that energy is really the big reason why we're seeing inflation come down, because once you strip out for energy, inflation is stagnating a little bit more sideways. It's more sort of stable as opposed to trending downward. So it's really, that's why core inflation is so important. That's why the Federal Reserve focuses on core inflation, because you never know how the volatility is going to be for oil prices and for food. And then when you strip out those two numbers, that is the real inflation the Federal Reserve is really focused on. And on both reports, on PPI and on CPI, we're seeing more of a stabilization on a core basis as opposed to the actual headline numbers. So keep that in mind. Obviously we already are pegged for about a 25 basis point cut from the Federal Reserve. So if you come over to the Fed Watch tool, we've got a meeting next Wednesday. So in about 6 days is when the next meeting takes place, and the markets are pretty much priced in for a 25 basis points, 85% probability after yesterday's report that we're going to get a 25 basis point cut next week on September 18th. So September 18th, next Wednesday, is when the report's going to come out along with the summary of economic projections. We'll be live to cover that entire event. I think it's going to be the most important event for the markets in all of 2024, probably the most important event for the last couple of years, because that is going to really mark the beginning of a interest rate cutting cycle. If 25 basis points indeed comes through from the Federal Reserve, which the market is very much optimistic of. 85% investors pretty much priced in for a 25 basis point cut. So that's where we are. Volatility rotating back a little bit, back over 17, and QQQs are still essentially flat on the day. So this was a bit of a decline after the numbers came out. So we dropped about 40 basis points. The S&P 500 also dropping a little bit further. So on the 5-minute chart, you'll notice that, long wick to the upside. But this right here was really the sell-off of over 30 basis points. But very, very similar reaction to yesterday's CPI report. A little bit of a knee-jerk reaction to the downside. And then we'll see what rest of the day brings us, because yesterday we definitely witnessed a significant amount of inflows into technology. So it really was a day where we were going into risk-on assets. So Bitcoin, Ether, Nvidia, even Magnificent Seven, like those were the sectors, those were the stocks that were really participating in this upwards momentum for the market. So this is the entire rally from around 10:30 a.m. Eastern. So really it was yesterday at 10:30 a.m. Eastern when a lot of volume sort of kicked in for the markets. And I mean, just take a look at these rallies. I mean, we ended up, by the time it was 10 p.m., we saw 5% inflow in Ether. Bitcoin also pushing up 4 to 5%. So, BTC, USD, if you come over to this, very, very similar price action as, going from 10:30 all the way till 2:15 p.m. Eastern, 4.3% rally here for Bitcoin as well. And that was almost identical trend for, if you come over to Nvidia, same exact pattern where, you'll notice that it kind of formed a bottom here at 10:30 in the morning. And then, of course, it rallied back up to over $117. So this right here was the massive move to the upside for Nvidia as well. So a lot of inflows, and we've also created a new tab for our members on the MoneyVest platform. So let me just go ahead and show you guys what that is. Let me just bring it up here in just a second. And what you can do is you can actually take a look at the overall market concentration and how much of those gains and losses are actually coming from different stocks. So this is what we have built for now, and we're going to be making some tweaks and adjustments to that as well. But I think it's going to be super helpful for everyone. Just give me 1 second. I'm going to put on this disclaimer. So this right here is going to be something that I think is going to be super, super helpful for everyone to really look at. And Bloomberg has something very similar. The Bloomberg terminals, they kind of give you that percentage contribution to the entire change on the daily basis. But what we have here is it's going to tell you the notional value of the S&P 500, $51 trillion in market cap for all stocks. And what we have here is nothing but specific indexes that we have created. And in the future, I'm going to do a poll in our community. What other stocks you want to club together to create a new index. So what we're going to do is we're also going to create something called Fin 5, which is the top 5 banks in the United States. in terms of their market caps. Then we're also going to be looking at the top 3 retailers, like, whether we want to include for Amazon, Walmart, Costco, things like that, and then other staple stocks or utilities. So you're really going to create some specific indexes to better understand where the liquidity is going to. So this essentially tells us, okay, big 3, we got Microsoft, Apple, Nvidia, almost $10 trillion in market cap combined, and we're looking at $321 billion going into this sector, this 3 stocks here yesterday, and it was up 3.5% compared to their previous day. Magnificent 7, 432 billion, top 10, 561 billion. And then you can also take a look at S&P 500 constituents, and you can come over here, again, look at 100 different stocks per page and go as much as 6 pages, and really take a look at, okay, which were the companies that were pushing higher, pushing lower among all the S&P 500 stocks, and by what amount, by what market cap. So you can also filter this by market cap change. And if you do that, you'll see Nvidia was at the top of the list, $215 billion, followed by Microsoft, $68 billion, Amazon, $52 billion, then Broadcom getting a lot of liquidity as well at $46 billion as well. So lots of momentum coming in for these companies. So it was a very much of a risk-on trade for the markets, of course. Now, I also do want to go over some other things, which we will talk about here in just a minute. So let me go over some of the comments first and give you guys a bit of an update on where we are with the markets, and then we'll focus on some comments and some questions on the live chat here. Okay, good morning, everyone. Thank you so much for joining. How does IWM look? Let's take a quick look. IWM has been underperforming a little bit here over the last couple days, I would say. It's still down from its all-time highs. So all-time highs, of course, sit well over $235. So we're still down a little bit over 11%. So still in a correction for IWM. But if you come take a look at IWM divided by, let's see, SPX, you'll notice that we have been underperforming a little bit over the last couple years. So S&P, of course, was the place to be, considering IWM has underperformed significantly in a very long time, and now it's starting to show some signs of strength. Every so often it kind of moves up, but then of course starts to rotate back lower. So this week so far, it is underperforming, down over 2% relative to the S&P 500. So yes, while the rate cuts, there is this big consensus that rate cuts are going to benefit small caps, mid cap stocks. And there's a lot of investors kind of betting heavily on IWM. Tom Lee, as we know, is very, very bullish on small caps. I have a position in IWM that I'm up on, very, very small amount. But I do believe that there is a possibility for us to see that momentum back higher, at least back up to all-time highs of well over $233 per share. So we got a brand new support here at 198 after it broke out. That's the new support. Resistance is going to stay put at $233. Copy and paste. So today trading graph follows exactly like yesterday's trading. So, well, we don't know yet. That is really just going to come down to what is going to be the expectation from the markets, of course. But it is possible, sure. I mean, yesterday's data was almost alike to what we just got today. But I do want to point out to the idea that markets may read into a little bit further into the acceleration that we're seeing in the core PPI when you exclude for food, energy, and trade services as well. So that blue line really is where the focus could be, which is, again, stagnating sideways. It's not really trending lower. Instead, it's just moving sideways, suggesting for the stagflation type environment, which many investors have called for. So stagflation, next American story. Game Rating Master says, LM says the Federal Reserve won't cut. Wall says Shelter is lagging and it has 35% weighting. On inflation. It is the only component that keeps inflation where it is now. Your thoughts, Caddy? So I agree. I think, Shelter has a big role to play. If housing doesn't come down in terms of rents, owner's equivalent rent, it doesn't come down, then it's very difficult for inflation overall to trend lower. So what we have here is 8.2% increase coming down to a more stable 5%. But it's really just stagnating sideways now. So it's not really, going down anymore. If anything, it accelerated back up on a year-over-year basis to 5.2%. So that is, of course, not the best news for investors, because it does make up over 30% of overall inflation. So if shelter prices are higher, inflation overall is expected to stay elevated. if shelter prices continue to decline, that's going to be a good sign because energy has been doing its part. Energy saw a significant reduction here in oil prices that came down. We saw from 41%, we went into deflation. So actually prices were going down on a year-over-year basis by 16% at one point, and then we started to stabilize a little bit sideways. And now, once again, we're down negative 4%. And food also has been coming down. It's practically down to 0%. So food has done its job. Energy has done its job. The only thing that hasn't really come down fast enough is shelter prices. And shelter prices, again, making up for majority of inflation. So core inflation still up. Turbo Last, thank you so much for that donation. I really appreciate that. Does PPI show producer demand going down? So it really isn't a gauge of where the demand is. It really is at the very core a gauge of how wholesale prices are holding up at the moment in the economy, right? So what are businesses paying for raw materials and for wholesale prices? That's what this tracks, right? So producer price index is essentially the producers' prices, right? So what are they paying at the input cost, input level for wholesale items, for raw materials, things like that. And once they've finished goods, then when they sell it to the consumers, that's what's translated over to consumer price index. So oftentimes you would also hear people that, okay, if PPI is higher or is increasing at a faster rate than CPI, that means that the margins are shrinking, and vice versa is also true. If CPI is higher, if inflation on the consumer level is higher than that on the producer level, then there is margin expansion because consumers are paying more for what it's costing the producers to pay for their raw materials. So I hope that makes sense because really it's kind of linking those two things together. It's input cost for the producer, that's PPI, and then it's the finished goods cost for the consumer is what they're paying. And if there's difference that is expanding, that can be reflected in the margins that are expanding for businesses. And they're going to maximize profit. Like at the end of the day, if they have pricing power and if the demand continues to be there at higher prices, they will maximize it, right? They're not running charities. They are for-profit organizations. And as a result, they're going to maximize if there is a demand for it. And right now what we have is a CPI that is running above 2.5 and a PPI that is running at 1.7. So there is still a differential, right? About 80, 90 basis points for consumer prices to be higher compared to the producer prices. So that is the margin that the producers are making, right? That's the businesses that are making. And we can also actually track that differential to better understand how margins do. So actually that's a good point that we should be able to do that simply tracking the difference between the headline CPI and the headline PPI to better understand whether that differential is increasing or decreasing, to better understand how margins could be doing for producers and how much pricing power they really have at the end of the day. So, okay, let's see, even though it might be transitory, but wonder why they don't talk about the deflationary numbers in CPI. So there's not really a lot of deflationary numbers in CPI. So if you really come over to the report, I mean, really the only one is energy. It's down about 0.4%. Other than that, I think maybe electricity, not really. Apparel prices, very, very close to deflation, but only 0.3%. Education, communication, it was in deflation territory for a very small period of time in December 2023, then exploded back higher, almost 1%. Then we got food away from home. We got gasoline. That, of course, is in deflation as combined with energy. Natural gas also. Commodities, less food and energy here, also in deflation, down about 1.9%. And we got services, less energy. Energy services, we are also in deflation. Actually, we're not. 4.9% is where we are. And medical care services, we were in deflation by 2.6%, but we're pushing back up. Yes, PPI numbers are out, everybody. Producer price index numbers are out. I shared with everyone, but this right here is where we are. So for August 2024, the total increase for PPI, headline PPI, was 0.2%. Year over year 1.7, which was a little bit lower than the consensus, and ex food and energy month over month 0.3%, slightly higher than what the expectations were at 0.2, and then core PPI excluding for food and energy year over year, we're sitting at 2.4%, and then if you exclude for trade services also, we're coming down to 3.3%, or I should say like we're pushing up to 3.3% because that was a bit of an acceleration from where we have been over the last couple of months. So market's reaction was not the best. Initial reaction was, of course, a little bit of a pullback on the QQQs, but we're more or less stable right now. Tesla is down about 1.2%, and then we got SPY up about 17 basis points, and Nvidia right now which is one of the hottest trades at the moment, is up over 27 basis points. I'm also considering rolling out my options up and out for next week for Nvidia. We'll see what the premiums look like. I'm most likely looking at about a couple more dollars in additional capital gains, so about a 112 or 114 strike for next week. Those are going to be in the money calls, of course, so we'll see what the premiums look like and whether I can get a net credit for rolling those out or not. So we'll keep you guys updated on the Discord, of course, and I think that should be interesting for us to see. Pedro, shelter is first necessity like food and water, so the economy has to break to cool down prices. Let it happen, fair. So that's a good point. You know, if sometimes a recession is necessary to bring inflation down, that's happened before. It won't be the first time that's happening. You know, as the Federal Reserve increases interest rates, what that does to the economy, of course, puts a lot of pressure. That pressure translates over to a recession. That recession leads to lower prices, and that's when the Federal Reserve cuts interest rates to normalize the economy, stimulate that growth again, and we're on our way back higher with some strong growth. So it won't be the first time, certainly won't be the last. It is possible that we experience that as well. What happened with the jobs data? So we already got the jobs data last week, so we covered that on Friday. We did see a little bit of a pullback in unemployment, back down to 4.2%, down from 4.3. So unemployed persons, however, did stabilize. Slight decrease, but it's still well over 7.1 million unemployed persons, with job openings just over 8 million, puts that ratio at 1.07. So it's normalized a little bit. It's come down from 2.5. You know, I've talked about unemployment extensively on the channel in multiple of my videos, going over job vacancies, going over unemployed persons, the ratio, the McKelvey indicator, recession signals, a lot of different things that we've talked about on the channel with regards to the jobs numbers. Kenny, hi Kenny, thanks for everything you do. One of the best out there for financial content. A quick one. What's your take on Nvidia short and long-term shares? So, you know, for the long term, I'm very bullish and optimistic on Nvidia. So I have it in my long-term portfolio. We'll continue to buy every opportunity I get. Closer to low 100s or sub $100 ideally would be the better price for me. Professor Demodron has a fair value at $86 for Nvidia. I've got it around the same price. It's on the 37 stocks and ETFs shopping list. So for long term, you know, I am bullish. I am optimistic on Nvidia. I believe that, you know, artificial intelligence, it's got huge potential. That's the future. That's going to be required in pretty much every piece of hardware that we build. And so Nvidia kind of leading that market, very, very dominant player. And it's not just Nvidia, like the entire semiconductor sector. I want to be very clear. I think semiconductors in general are going to offer tremendous amount of value creation for artificial intelligence and, you know, high-end computing. So for those reasons, I am optimistic and I will continue to buy for the long term. In the short term though, you know, since it has so much volatility and it's jumping up and down like crazy, like last week it was down 15%. This week it's already up over 13% right now. Premiums are really, really lucrative. Like they're very attractive. So I want to take advantage of those opportunities. I want to trade Nvidia while I can, while it continues to trade sideways. And that's the thing, right? I mean, yes, buy and hold is great, no doubt about it. Like buy and hold high quality companies and, you know, just do that is fantastic. But then you also have to consider the risk or the opportunity cost. Sometimes you have to be smart about how you want to go about trading the stock or the market that you're in. Tesla, I'm a long-term investor in Tesla. I love that stock. I love the company. I love the potential that it has over the long term. But I also cannot ignore that over the last 3 years, it has gone nowhere. It has literally gone nowhere. So you tell someone that buy and hold is best, but you go back 3 years and it's given you no returns. If anything, it's actually gone down, right? It's gone down by 45%. In some instances, down even more. So while it's completely okay to have a long-term portfolio where you continue to accumulate and dollar cost average for the long-term thesis to play out, that may take many, many years. You can also consider on a short-term basis, medium-term basis to you know, set up those trades with proper risk management, proper stop losses, proper ideas and strategies to generate some income and generate some cash flows. I mean, Tesla has given me so many premiums, like so much profit, realized profit over the last 3 years just by trading the wheel on this. That it's insane. And the rally hasn't even started yet. It hasn't even broken out of its 270 resistance. So for Nvidia, I kind of, you know, see something similar. Is that going to happen? I don't know. If it takes off, great. Still have it in my long-term portfolio. If it doesn't, gives me the opportunity to trade the wheel over and over again, considering how strong the premiums are for this stock here. So it really practically is trading at the same level from back in May. So we got June, July, August, September, and now almost approaching October. So 4 to 5 months of sideways action for Nvidia is a lot of consolidation, right? You could be the most bullish investor on Nvidia, but you also cannot ignore that there are going to be instances where it goes sideways, right? There's consolidation because a lot of the growth is already baked into the price. It's already pulled forward on a lot of that future growth. And why else would Professor Demodron put down an $86 fair value on Nvidia, right? I also have a fair value which is almost something similar. So if it trades down to lower prices, in and around these levels here, so we're talking $82, $76 right around here, great. I'm going to be a buyer for the long term. But if it doesn't, if it continues to trade sideways like this, then that's also phenomenal. That gives us the opportunity to trade this and milk out as much money as we can. These are all realized profits, so we're not kind of looking at unrealized gains here. Okay. Core inflation delays the Fed rate cut, where we go into the bit of deflation markets, panic, we get a good buying opportunity. So yes, anytime there is a panic in the market, anytime we see, significant selling pressure, money invest index, coming down to, low threes or even sub threes, that is by default for me going to be a very good buying opportunity. That's exactly what we witnessed back on August 5th for the markets when volatility spiked to over 65. Money invest index was at 2.95. Very, very close to the levels we haven't seen in over almost a year since November of 23. So, those are some things to consider. When markets come down, they give you an opportunity to dollar cost average for the long term. Like buy your high quality companies that you've always wanted to buy for the long term. Okay, so let's see. I think the markets are a bit ahead of itself. Would be good to have a dip and let the markets digest the fact that rates might not come down as fast as what we might be expecting. A bit of deflation as well. Yes, I think yeah. So what the markets really are witnessing right now is risk on, risk off, right? That's really what's been happening in the markets. We're kind of rotating in and out of different sectors. Utilities leading one day, next day technology is the big winner. The next day that we've got Eli Lilly and Procter & Gamble pushing higher. The following day, Nvidia is the biggest trade of the day. So it's just really been all over the place because the market's sensitivity to a lot of this economic data has increased substantially. Because we're coming to a point where the Federal Reserve is now on the verge of cutting interest rates in just about 1 week. That is a big shift in the market. That's a huge pivot, right? We're just going from quantitative tightening. We're going from a restrictive monetary policy standpoint down to some more easing. We're going to get updates on their balance sheet. How much are they going to continue to reduce the size of their balance sheet, as well as how many rate cuts and for how long are we going to see those rate cuts? So that's a big shift for the entire market. And that's why whatever data point comes out now, right? So got the unemployment, got the CPI, got the PPI. In the future, whatever unemployment numbers and inflation numbers we get, the sensitivity to those numbers is going to increase, meaning volatility is going to be more prone to whatever that numbers are coming out, because then the markets are always going to be in this guessing game. For the longest time, the markets knew the Federal Reserve is not increasing rates, but they're also not cutting rates. We haven't seen, in over 20 months, no hikes, no cuts. The market's pretty much been certain about the fact that, okay, Federal Reserve is not doing anything right now. They're not raising, they're not cutting. That's where we are. But now we're going back to the guessing game where we were when the Federal Reserve was increasing rates. When they were increasing rates, the markets were, again, in this big question where are we going to see another hike in the next meeting? Are we going to see another jumbo hike? If so, by how much? And don't forget, the Federal Reserve actually did 3 75 basis point hikes to get ahead of its inflation. So now we're back into that guessing game. Okay, how much are we going to see those rate cuts by? And if so, for how long and for how many? So market hates uncertainty. If there's uncertainty, markets by default take that route to sell off, to kind of sit out the market until there's more clarity to go back into risk on assets. So I think that's the loop that we're kind of in, where it's risk on, risk off, day to day. And that's why I mentioned that this is a good tradable market to be in, because we're really just trading sideways, and S&P hasn't really, gone anywhere since July. I mean, July we're practically at the same level. We sold off, we pushed up, we sold off again, a little bit of a minor dip, double top here, but also can be considered a bit of a higher low. So it's really, practically at one point we were at the same level from back in June. So it's been 3-4 months where the S&P has just been trading sideways. Okay, folks, do me a favor, drop a like on this live stream if you're enjoying the updates on a regular basis, and also subscribe to the channel. Let's see, what are we approaching almost to? So let's see here. Let's see. So we are right now at 83,656. Let's see if we can get up to 83,700. I would really appreciate that. So encourage your friends, family, other traders, investors who can benefit from this information and can help us get to that goal as a community. We'd love to grow, and of course, by the end of this year, hopefully we can get up to 100,000. Okay, so does the PPI is out? Yes, the PPI numbers are out already. So just for people that are joining us now, we came in at around 0.2% in line with consensus, 1.7% on a year-over-year basis, slightly lower than the consensus of 1.8 and significantly lower than the prior number of 2.2. It's really the core inflation that once again increasing a little bit, so 0.3%, higher than the consensus of 0.2, and then year over year for core inflation, 2.4% was that number. Yes, Qualis, we can take a look at that as well. QLYS, just very quickly, I'm going to answer some questions here. So, Caddy, why weekly NVIDIA options and not monthly? So, monthly tends to be a lot more, volatile. In terms, like I used to do monthly, and I would still do monthlies, like 30 to 45 days till expiration. I would still do that. But the reason why I'm kind of doing shorter options right now is because it gives me more flexibility to manage my options really well. So for example, next week we've got the Fed meeting. This week we had inflation. The week before that we had unemployment. The week before that we had NVIDIA earnings. So 4 weeks in a row we've got so many things that are lined up. It gives me better sort of flexibility to manage my options if I need to roll them, if I need to close them early, if I need to retrade them. So it gives me more flexibility to manage them better. If I'm doing 1 month out, then yes, I can still manage them, but then the problem that becomes is when I'm rolling options, it's very difficult to roll in, right? It's a lot easier, and most likely in most cases you're going to be rolling out, meaning you're increasing your expiration, and in most cases you're also rolling up, meaning that you're rolling up on your strikes, right? Depending on whether it's called a put, but you can't roll in, right? So if you're already starting with 1 month, right, you can't roll back in to a lower expiration. You'll always be going out, and I really don't want to have that much time on an option contract. So really what I'm doing is weeklies gives me more flexibility. If I need to roll out, I can always roll out, but it's more difficult to roll in. So I hope that makes sense. Which platform do you recommend for options trading in the UAE? So I think Interactive Brokers offers options. Level one options should be fairly easy to qualify. It is selling covered calls and selling cash secured puts, and that's practically the strategy that I utilize. What I'm also going to be doing next week is actually quite an interesting strategy that is called a hedge wrapper. So if my option, well, actually, you know what? Yeah, so no. I'm not going to most likely do that because this option that I have on NVIDIA will most likely be closing in the money at close to 110. I'll see if I can roll those options out. But if I roll this out this today or tomorrow, then I will be doing a hedge wrapper. It's like a collar because I'll be selling calls and selling puts on the same stock with the same expiration, but different strikes. So we'll be doing that. We'll update everybody on the Discord. I think it's going to be quite an interesting week next week because we've got the Fed meeting as well. So, okay, PPI unemployment rate looks bad. Another sell-off is coming at the opening. Fong Mai says 25 basis point rate cut is certain, but disappointing for the traders. So, okay, and then how long until PPI? We already got that. And you do leaps or trade shares. So mostly trading options like selling puts and selling calls, and at the same time, mostly investing for the long term for individual stocks. Inflation's at 2.5%. Interest rates are 5.5. Feds are way behind the curve. So Tara, that's a good point. So, to your point, real interest rates are at 3%. So once you account for the inflation rate, and then you subtract it from the federal funds rate, we're at 3%. And that is what means that the economy is still under restrictive monetary policy. However, the Federal Reserve does not need to operate at a 0% level. It doesn't mean that the interest rates need to be at 2% just because inflation's at 2%. So it doesn't have to match 1 for 1. If the Federal Reserve wants to be a little bit more tight in the economy, they can certainly be above the inflation rate. If they want to be a little bit more loose, they can be below the inflation rate, thereby making real interest rates negative. So there's no rule of thumb that they need to operate 1-to-1. Or if they're behind the curve or ahead of the curve. It's just where the stance currently is or is going to be based on the data that's coming in. So to your point, I fully do agree. I think this time around, they're behind the curve. They're operating at an interest rate which is 3% higher than inflation. So they're very, very restrictive right now. But I think a more normalized rate will be closer to 3.5 or closer to 4%. So 150 basis points over inflation is pretty normal. That's going to make sure that, okay, we remain moderately tight to make sure that inflation doesn't spiral out of control, but also at the same time does not put too much pressure on the economy that warrants a recession. So I hope that makes sense. It's really just kind of finding that balance between being too tight versus too loose, and really just kind of maintaining that rate, which is stimulating growth, but at the same time, not putting a lot of pressure on either inflation or the economy. So hope that makes sense. Google looks to be trading back above $150. So yes, Google is one of the stocks that I've picked up. Will continue to buy. Very nice move back up, 1.6% to 154 right now. And this right here is the area of demand for Google. So very, very strong area of support and demand. We've talked about this on the channel before. And it's also part of our 37 stocks and ETF watch list. So right there, support level roughly at 151, 152 for Google here. Okay, Qualys, we'll take a quick look. QLYS. Let's see. So let's see how that stock is doing. So it continues to break down. I would say the next support here, Prerit, is going to be sitting roughly at $104, $105. So lots of demand here for this company, and that would be that next support level to watch. It also seems to be forming these bear flag breakdowns every so often. So, sells off, consolidates sideways, then breaks down further, then consolidates sideways a little bit here, breaks down further. Looks like consolidating sideways, so it's possible that it breaks down further. So there's been this bear flag breakdown pattern for this company since 2023, December 2023. So I'd be watching the support here at $104, $105. Okay, so Devin Palantir, thank you so much for that donation. But let's take a look at Palantir. The next target's pretty much the all-time high. Another pretty strong week for Palantir, up almost 15%. And the next target and resistance all the way up to $44, $45. I do believe that $40 is possible by the end of this year. That's kind of like my unofficial target on Palantir, just based simply on the momentum that we're witnessing. And 45, of course, is going to be the all-time high. I would just say to be careful because the valuation is high for Palantir. I mean, trades at over 30 times sales multiple and well over 60, 70 times earnings. So I would just be very careful about the valuation that Palantir trades at. If you already have the stock, great. I would just enjoy the ride on the way up. But if you're planning on starting a new position, I would definitely think long and hard before you deploy capital into Palantir, trading at a valuation that it's trading at now. Like I said, 30 times sales and I think 60, 70 times earnings multiple. If you believe in the growth long term, nothing wrong with that. Just I want you to be aware of what valuation you're buying at, because do not invest in companies based on the price of the stock. Invest in companies based on the price of the company. Company price is the valuation. Price of the stock can fluctuate, and it's pretty much irrelevant. Whatever the price is irrelevant at the end of the day. Okay, Mike, yes, thank you so much. Help Caddy get to 85,000. Appreciate that. And let's see, ECB interest rate decision 3.63%, like forecast was 0.6% lower than previous. Good for special altcoin today. Best entry. Okay, altcoins, just be careful. Have your proper risk management in place. Someone says, okay, newbie question here. When you are trading, do you do it with options or actual shares? Not sure what the benefits are of one or the other. So when you are, so there's two different strategies. Mostly I like to trade secured puts and covered calls. And when I'm selling puts, I have cash ready to buy the shares if I need to. So because as a seller, you have an obligation. As a buyer, you have the right. This is something that we have discussed in the options course. But if you are selling options, just remember you have an obligation to fulfill on your orders if those contracts are in the money by the time the expiration comes around. And they are enforceable at that strike price. So it's an obligation if you're selling options, if it's a right if you're buying options. So for me, if I'm mostly selling, I have the cash ready or the shares ready to fulfill those orders that I am selling my options on. Okay, futures not really showing enthusiasm, and traders had enough time to reflect on the PPIs. So what I would say is this PPI reading is neither okay nor bad, or looking at the futures are pointless. Well, I think PPI's relevance to the market is a little pointless. Not that the futures, looking at futures is pointless. I think CPI plays a bigger role on the market's direction as opposed to producer price index. But yes, we are basically flat right now, and Nvidia just dropped pre-market. I mean, it was up a little bit over 1%, but it looks like we are seeing a decent sell-off in Nvidia, back down to $117 right now. Okay, so I agree with you. I was about to say that in my opinion, rates should be at least 3.5%, so that's good. We didn't get my all-time highs in August. What do you think about SPY peaking to 6K in October for my birthday's access? I think it's going to peak around my birthday in November. I think elections are a little bit more uncertain. It's going to create some uncertainty for the markets. And like I said, markets hate uncertainty. I think things will clear up after November, after the first week of November. Because of, we'll know what the Federal Reserve's trajectory looks like. We'll have a couple more unemployment and inflation reports to reflect on. We'll have the outcome of the inflation of the elections. So things will clear up in terms of, okay, what the next year and even 4 years look like for the markets and the economy, given the outcome of the election, given the Federal Reserve's statements and the SEP, given a couple more unemployment prints, as well as inflation reports. And I think we'll have a much better idea in that November meeting. So November 5th is the election. November 7th is the FOMC meeting. So those 2 days, I think that's when we kind of clear a lot of those questions, those doubts with the market. So I think that's going to create that momentum, and it's going to open us up to potentially have a very nice last couple of months of the year. November and December, historically, also seasonality-wise, they've been the best months for the market. So first week of September was brutal. This week, we are up over 2.6%, so we're kind of recovering a little bit from last week's losses. But I still wouldn't write off the September seasonality, because it's really just the last couple of weeks of September that the selling pressure tends to be more brutal. And if that were the case this year, then this week could be considered as a bit of a bull trap. And then we'll find out what happens next week with the Fed. And then, of course, before you know it, we're going to have earnings season starting in October as well. So yeah, I mean, it's really October 15 to November 15. That's going to be that 30-day period where I think a lot of the data that's coming out, all the earnings, unemployment, inflation, manufacturing numbers, construction, everything, as well as election and the Fed meeting, is really what's going to make or break the markets here in the next sort of next few years. Brajesh, can I buy Nvidia today? So really depends. I mean, your time horizon, your conviction on that company. Sargel Pro, did you lose money on Nvidia? So no, up very, very nicely. Now I have capped my upside on the options portfolio, but that is how you run the wheel in the first place. You can't time the trade perfectly, but so far the last 3 weeks, just netted just over $3,000 on Nvidia, and will most likely roll out my options today. We'll see what kind of net credits I can get, and if that were the case, then I can also lock in a little bit more in capital gains, and so I can increase my profit from $3,000 to like $4,500, $4,800 if I'm able to roll out my options for next week. But it depends largely on how Nvidia trades today, and what kind of premiums we're working with. Okay, Moderna down on cost cuts could be interesting. What do you think about MBLY? So let's take a few looks here very, very quickly. So Mobileye, I think I've done a video on Mobileye before. Intel's spin-off IPO. I think it was priced very, very expensive. 3 back-to-back months of just brutal selling pressure here, down over 62%. So hitting a new all-time low, basically. So I'd be very careful. It's kind of like a falling knife right now. And until we see some buyers stepping in, I would just kind of stay away from it, watch it from afar, and see if there's any potential there. Moderna, let's take a look on the weekly. Selling off down over 14%. Support level next is going to be sitting right over there at around $63. So that right there is going to be that level, down to as low as $53 for Moderna. ACLS next support is going to be down at 70 at 50. And we're going to go ahead and turn this level into a resistance now. So very, very strong resistance for ACLS in and around these levels. Next supports all the way around $78.50 for ACLS. HIMS, let's take a quick look at HIMS and HERS. I know there's a lot of people that are very bullish on this company long term. It's been rolling over just a little bit from its highs of $26, down about 50% already. And support level is going to stay put right here. roughly at $15. And another support to keep in mind is going to be down about here. Oh, the market just opened. We were so engaged in our conversation that we forgot the markets were almost ready to open here. So S&P 500 flat right now. I'll come to a lot of these questions here in just a minute. We've got QQQs also very, very flat, with NVIDIA down about 20 basis points. And we've got Tesla down about 1.4% right now. So back down to 224 at the moment. Excuse me. Been under the weather a little bit. So Bajesh, I will join your courses shortly. I'm impressed. Great knowledge. Yes. So feel free to join. We've got the MoneyVest education tier that gives you access to all the 4 courses, 172 videos on options, fundamentals, technicals, and psychology. So I think that should greatly help in your learning. And if you have any questions, please feel free to reach out, and I'm more than happy to help. What is your thoughts on Adobe? They released earnings today. Is this the right time to enter into for the long term? So Srinivas, I would definitely refer to my 37 stocks and ETFs shopping list for Adobe. I've got the fair value, the buy targets, everything's listed right on that spreadsheet. So it'll give you a much better idea of where I see the value in Adobe in terms of what prices. But technically speaking, we got a nice support here at 503, down to as low as $403, aligned with this previous support from back in May of 2024. So that's where we are. NVIDIA down to $116. I gotta take a look at how my options are doing, and if there is a possibility for a rollout. I'll be looking at 116 or 112 call strikes here. So let's take a quick look while we can. Boom, boom, boom. Let's see. Okay, it's loading. It's loading. Charles Schwab really is very, very slow, to be honest, sometimes. $112, I can get about $130 in net credit. So I think it would make a lot of sense for me to do that. 113, and I'm paying a debit. 112. What do you guys think? By next Friday, is NVIDIA going to be above 112? 112 going once, 112 going twice. What does everyone think? Is NVIDIA going to be above 112 by next Friday? Next Friday, not this Friday, not tomorrow, but next Friday. What is everyone's predictions? I really want to know. What is everyone's expectations for NVIDIA price action by next Friday? I mean, this has really been just a nice little recovery for NVIDIA, but let me know, what are you guys thinking for NVIDIA here by next Friday? If it ends up selling off, I guess that's still good news, because 112 is $4 below. Brian says below. Above. Don't forget, we've got the Fed meeting next week as well. So got to take into account that as well. There's going to be some volatility with the Fed meeting. NVIDIA has been all over the place. It will be 125. There we go. It's back above. It's back in the green now. Lots of buyers stepping in. Look at Tesla. Just turned profitable here. Just turned positive. Up over 3 basis points right now. S&P 500 is up about 10 basis points. So also wanted to go a few more things here. So CEO Jensen Huang sold just another $25 million worth of NVIDIA shares for a total of more than $78 million over the last week. A few more things I want to go over. So the prime rate just jumped to its highest level in over in this century. It's just kind of funny how they put it, in the last 24 something years. And 37% of U.S. small businesses have seen their earnings drop over the last 3 months, the highest share in 14 years. And this is even weaker than the 35% seen during the 2020 pandemic. And over the last 3 years, small business earnings have declined in near straight line lower. So small businesses definitely are indeed struggling right now with the interest rates as high as they are. So we did have a little bit of a pullback, then got bought up here, starting to come down, but Tesla's looks like it's the potential trade of the day. Just 4 straight green candles in a row, and Google also doing very well, up almost 2% right now. So very nice, back up to 155. We were looking at calls, puts on Google for selling them because of how interesting it was down in the 140s. But my Charles Schwab doing what it does best, not being able to do that, not allowing me to sell options because my funds hadn't settled yet. So I had to wait. So here we go. From a Mag 7 standpoint, Advanced Micro Devices is down the most. Well, not that it's part of Mag 7. No margin account, no. So I don't trade on margin. I only trade on using cash. Same as Thinkorswim. Thinkorswim's been absorbed by Charles Schwab, so they didn't let me sell options because my funds hadn't settled yet. And so I have to wait until Monday to place new trades. So I'm kind of pretty pissed about that because I was hoping like Friday expiration tomorrow I can just make another couple $100 and that's it. Like you just gotta wait until the fund's settled. Anyway, so Google up almost 2%, Meta pushing higher as well. We got Netflix, Tesla, Amazon rallying back up. So market seems to be a bit more indecisive on the day today, where QQQs are essentially flat. We've got SPY also just trading sideways, not really giving us a very clear direction. And we'll see what happens with NVIDIA. Letty, margin account for the win. Just be careful with margin accounts, as I'm sure you already know. No, that's okay. I stay away from margin just altogether. I could trade on margin, but I'm already trading options, and to pile on more margin on top of that, it's just starts to feel very... No, I haven't been selling calls on PayPal just yet. It's way below my cost basis, so if I go with a lower call strike, I risk getting my shares called away at a loss, and I don't want to do that. NVIDIA is back over 117. Volatility here is, let's take a look. Volatility is up about 1% right now, so just a little bit under 18 right now. You're responsible enough to trade on margin, Letty says. Yes, I know that I am, but it's just, I don't know, it's just not something that I prefer. So what is everyone thinking? Is this a fake rally right now? Are we going to get absolutely crushed in a few hours, or is this for real? Is this more momentum, more rallies coming for real here? So there we go. That's the change, live change on the market cap. $55 billion added so far into the day. The top three are basically flat, down almost $6 billion. Then we got Magnificent Seven, $71 billion, and top 10, $104 billion. Some of the biggest changes. Google coming in with the heat, $34 billion. Then we've got Meta Platforms, almost 20. NVIDIA up over 18 billion. Amazon up almost 17. Oracle up 3% right now, so seeing a lot of momentum as well. Oracle has pretty much been trading near all-time highs, up another almost 3% right now. The bulls have been awakened from hibernation. You'll get 2.5 days before you get margin call liquidation. Yes, so I want to avoid that at all cost. So If you have any questions about not individual stocks, but really just about the markets in general, let me know, and I'm more than happy to go over those. Individual stocks, I really just want to analyze it in our Discord for the members if they have any questions regarding any individual stocks. Most of them are in the 37 stocks in ETF. So, whether it's cybersecurity or semiconductors or technology in general, I think a lot of them are part of that spreadsheet. And you can refer to it. It's got my fair values, my buy targets, my no-brainer buy targets, all of that in there. And I think that can serve as a very good guide on what stocks to look at and then how you want to go about formulating those trades for yourself. So you can sell more covered calls with margin. That is true. So I could do that. But then there's a big risk that if I own shares with margin, if the stocks drop aggressively, like I'm trading NVIDIA right now, then, the account can get liquidated. Letty, stop selling me on margin right now, okay? I'm not caving in. I'm not using margin to trade options. So historically, which part of September has been the worst sell-off? It's been towards the last 2 weeks where the selling pressure has really accelerated. So PPI numbers already out, S&P 500 resistance. So question, can we have one-on-one with you if subscribe for MoneyVest? So we used to have that. Right now, with the limited time on my hands, I'm not able to offer one-on-ones. Maybe in the future we can do that, but right now it's kind of difficult with everything that's going on. Like, we're working on the platform, the MoneyVest website, the courses, the transition away from all the other platforms over to our own website, and trading and everything else. That's just, it becomes difficult to find the time to. And then on top of that, got to do a lot of research and analysis and kind of bring you the best information. So it becomes a bit difficult. But definitely in the future, I will reopen that up for members. Come this money. Okay, perfect. Yeah, we'll definitely come meet with you. Yeah, margin always carries extra risk as well. Lululemon. Wow, Nvidia's back up to 117.74 right now. So very, very incredible run up here. So Lululemon, we've got a huge sell-off in Lululemon, down I think over 50 to 60% from its highs of $481. So down over 50% right now. Coming up to that resistance, I would say. So we'll go ahead and turn this level into a resistance once again for Lululemon. It's a good company. I like the brand. I like the fundamentals. I like everything about Lululemon. It's just the uncertainty around the consumer remains to be a big catalyst as to why it's been selling off. And of course, we're technically really weak. Tesla for the big win today, 1.3%. So very, very nice move, $231. And we've got NVIDIA back in the green, $117. I may even consider rolling out a little bit further out, 920. Wouldn't be so bad either. Good time to get out of MDB. So MongoDB. Let's take a look at this company. Not profitable. So, always when you're investing in individual stocks for the long term, definitely figure out, okay, what's the company's profitability like? Are they planning on getting profitable in the future with positive cash flows? Because if they're not, then they could not turn out to be the best places to put your money in. Very few companies can execute according to their plan. Palantir is a prime example of how they were able to turn the corner towards profitability. But for every one Palantir, there's 99 Neos that are like just still struggling, right? Not able to become profitable. So it's very, very important that you do that analysis of profitability. But for MongoDB, I think support level, right about 214, we had this gap that we're now starting to fill out. And if you were to put down a resistance, well, maybe there's resistance, definitely resistance here at 428. and another previous support potentially acting as a resistance at 325. Okay, let's come over to the markets here on the 30-minute time frame. I'll go over the levels. Okay, this is why this is so important, is because S&P right now is like right there. It's literally right at that resistance. So a level that was historically acting as a very strong support is now acting as a bit of a resistance. Now the question for all of you, 500 of you guys watching, is whether we get a breakout from this resistance here, or we get a rejection and we start to trade back lower. So that's the big question here. That we saw a very nice rally yesterday. We're coming up to this resistance, and now the question becomes, is a breakout on the cards, or is it a rejection and then back lower? That's the big question, and same thing's true for, I believe, QQQs coming up to that resistance now. And this is where we are. So, at 468, yes, we've done analysis on SoFi as well, a lot in the past. And so on the 5-minute time frame, you'll notice just consolidating sideways, and support level now is going to stay right about here. And these levels actually do matter, right? So they are very, very carefully curated and calculated in terms of where the support resistance is, because even yesterday, you'll notice that as soon as we broke out, we came down to validate that support before pushing up and resuming that rally. So now we got a resistance at 468.88 and a support level at 464. So that would be the level to keep in mind on the day today. So that's going to be it for today, everyone. Thank you so much for joining in. I really appreciate that. And make sure that you drop a like and subscribe to the channel. Help us get to our goal. You're going to be part of an amazing community. I guarantee you that. A lot of people that are just focused on helping each other with their investing and trading journey. And really, if you have any questions, please do let us know. We've got lots of amazing people. I can't speak highly of... I can't enough speak highly of how amazing the people are in our community. Just really true, genuine people that want to help each other grow and really just, help you in your investing journey. So again, thank you so much. Really appreciate you all. Make sure that you drop a like, subscribe to the channel. Market doesn't seem to like the fact that I am going, but we are starting to roll over just a little bit. So